Hello guys, welcome back to Price Doctor's YouTube channel, where we talk about anything to do with finance while simultaneously plugging our site. Today's video is going to give you the know-how behind dividends, from what they are to how to get the most out of them, to how to potentially live your life off of them without needing to work. Remember, this is not financial advice, so do your own due diligence before making a decision regarding your financial position. A dividend is a distribution of profits by a corporation to its shareholders. When a corporation earns a profit or a surplus of profit, it's able to pay a proportion of the profit as a dividend to the shareholders. Simply put, the company pays you for being their shareholder. In the United States at least, companies usually pay dividends quarterly, though some pay monthly or semi-annually, that's every half year. A company's board of directors must approve each dividend, which may cause dividend dates to change between each time. The company will then announce when the dividend will be paid, the amount of the dividend, and the ex-dividend date. The ex-dividend date is extremely important to us investors. Investors must own the stock by that date to receive the dividend, because those who purchase the stock after the ex-dividend date will not be eligible to receive the dividend. Essentially, if you don't own the stock before the ex-dividend date, you won't get paid. Investors who sell the stock after the ex-dividend date are still entitled to receive the dividend because they own the shares as of the ex-dividend date. There are several types of dividends a company can choose to pay out to its shareholders. Cash dividends are the most common type of dividend, and it's done when a company generally pays cash directly into a shareholder's brokerage account. There's stock dividends where, instead of paying cash, companies can also pay investors with additional shares of stock. Then there's dividend reinvestment programs. Investors in DRIP or dividend reinvestment programs are able to reinvest any dividend they received back into the company's stock, often at a discount. One of the more rare dividend types are special dividends. These dividends pay out on all shares of a company's common stock, but don't recur like regular dividends. A company often issues a special dividend to distribute profits that have accumulated over several years, and for which it has no immediate need. These are rare because they happen randomly, and it happens depending on what the shareholders think. Stocks that pay dividends can provide a stable and growing income stream. Investors typically prefer to invest in companies that offer dividends that increase year after year, which helps to outpace inflation. Larger, more established companies with more predictable profits are often the best dividend payers. These companies tend to issue regular dividends because they seek to maximize shareholder wealth in ways aside from normal growth. However, startups and other high-growth companies such as Tesla or Bionano usually don't offer regular dividends because these companies are focused in the early stages of development and incur high costs as well as usually losses attributed to research and development, business expansion, and operational activities, so they won't have sufficient funds to issue dividends. Even profit-making early to mid-stage companies avoid making dividend payments if they're aiming for higher than average growth and expansion and want to invest their profits back into the business rather than paying dividends. Since dividends are irreversible, their payments typically lead to money going out of the company books and accounts of the business forever. Therefore, dividend payments impact the share price. It might rise on the announcement of the dividend approximately by the amount of the dividend declared, and then decline by a similar amount at the opening session of the ex-dividend date. Dividends can be expected by the shareholders as a reward for their trust in the company. The company management may aim to honor this sentiment by delivering a robust track record of dividend payments. Dividend payments reflect positively on a company and help maintain investor trust. Dividends are also preferred by many shareholders because they're treated as tax-free income for shareholders in many countries. Some people believe that company profits are best reinvested in the company, such as research and development, capital investment, the company's own expansion. People who think this way suggest that an eagerness to return profits to shareholders may indicate the management having run out of good ideas for the future of the company. But some studies, however, have demonstrated that companies that pay dividends have higher earnings growth, suggesting that dividend payments may be evidence of confidence in earnings growth and sufficient profitability to fund future expansion. A few of the best dividend-paying stocks can be seen here in this graph. These companies have been paying dividends consistently over a long period of time, gaining the name dividend aristocrats. However, some of these companies are in declining markets, so don't use only past data to predict the future viability of these companies. That's this video about what dividends are. Let us know if you have any questions in the comment section down below. Join our Discord for regular giveaways, tips and tricks from our top members, and the easiest way to contact support if you have a question. Also, don't forget to give our site a visit to earn some easy money by taking some surveys, downloading games, and so on. Otherwise, thanks for watching. If you like this video, press like, sub to our channel for more like this. The code for this video is dividend25. You'll gain 25 points for using it. And with that, it's been Price Doctor, signing out.